Are you ready to take control of your financial future in 2025? With the ever-changing landscape of personal finance and investments, it's essential to stay ahead of the curve. As a beginner, navigating the world of investing can be overwhelming, but with the right guidance, you can unlock a wealth of opportunities. In today's fast-paced economy, every dollar counts, and making informed investment decisions is crucial. By learning how to invest wisely, you can secure your financial stability and achieve your long-term goals. From understanding risk management to diversifying your portfolio, we'll cover the essential topics you need to know. But first, subscribe now and join the conversation. Your feedback and comments are important to us. Let's learn together and build a stronger financial future. In this comprehensive guide, you'll discover the secrets to successful investing, including how to set realistic financial goals, the importance of emergency funds, strategies for managing risk and volatility, tips for selecting the right investment products. By the end of this journey, you'll be equipped with the knowledge and confidence to make smart investment decisions, ensuring a brighter financial future for yourself and your loved ones. As we enter 2025, the world of personal finance and investments is more complex than ever. With the rise of digital banking and online trading platforms, it's easier than ever for beginners to get started. However, this also means that there's a wealth of information available, making it difficult to know where to begin. For those just starting out, investing can seem daunting. The sheer number of options, from stocks and bonds to real estate and cryptocurrencies, can be overwhelming. It's not uncommon for beginners to feel like they're taking a wild guess when trying to decide how to invest their money. One of the biggest challenges facing beginners is understanding the basics of investing. This includes concepts such as risk tolerance, diversification, and compound interest. Without a solid grasp of these fundamentals, it's easy to make costly mistakes. In today's market, it's also essential to be aware of the impact of inflation and interest rates on investments. For example, a low-interest rate environment can make it more difficult to earn a decent return on fixed-income investments like bonds. Ultimately, the key to successful investing is education and patience. By taking the time to learn about the basics and developing a long-term strategy, beginners can set themselves up for financial success. Investing in 2025 requires a solid foundation, and we're here to help you build it. By learning how to invest for beginners, you'll unlock a world of financial freedom and opportunities. To take your knowledge to the next level, subscribe to our channel and join the conversation. Your feedback and comments are invaluable in shaping our content. Together, let's create a community that empowers beginners to make informed investment decisions and achieve their financial goals. Investing for beginners in 2025 requires a solid understanding of personal finance and investment strategies. A clear goal is essential, such as saving for retirement or a down payment on a house. To achieve this, it's crucial to start by assessing your financial situation, including income, expenses, and debt. Next, set a budget and allocate a portion of your income towards investments. Consider low-cost index funds or ETFs, which offer diversification and lower fees compared to actively managed funds. A practical example is investing $500 per month in a diversified portfolio of stocks and bonds. Another key aspect is risk management. Beginners should avoid putting all their eggs in one basket by diversifying their investments across asset classes. This can be achieved by investing in a mix of stocks, bonds, and real estate investment trusts, REITs. For instance, investing 60% in stocks, 30% in bonds, and 10% in REITs can provide a balanced portfolio. It's also essential to understand tax implications and consider tax-advantaged accounts such as 401k or IRA. By following these steps and being consistent, beginners can develop a solid investment strategy and work towards their financial goals. The financial landscape is rapidly changing, making it crucial for beginners to understand how to invest effectively. A pivotal moment that emphasizes the urgency of this knowledge is the increasing cost of living. As inflation rises, the purchasing power of money decreases, making it essential to grow one's wealth through investments. The COVID-19 pandemic has also highlighted the importance of financial resilience. Many individuals lost their jobs or saw their income reduced, leading to a significant increase in debt. This has created a sense of urgency for people to learn how to manage their finances and invest wisely. One key problem that requires immediate attention is the lack of financial literacy among beginners. Many individuals are unaware of the different investment options available, such as stocks, bonds, and ETFs. This lack of knowledge can lead to poor investment decisions and a lower return on investment. As a result, it's essential for beginners to educate themselves on how to invest in 2025. This includes understanding risk management, diversification, and long-term planning. By doing so, they can make informed decisions and achieve their financial goals. Investing for beginners in 2025 requires a solid understanding of personal finance and investment principles. One key concept is risk tolerance, which refers to an individual's ability to withstand potential losses. A risk assessment can help determine the right investment mix. Another essential concept is asset allocation, which involves dividing investments among different asset classes, such as stocks, bonds, and cash. A common rule of thumb is the 60-40 rule, where 60% of investments are in stocks and 40% in bonds. Diversification is also crucial, as it helps spread risk across various investments. For example, investing in a mix of domestic and international stocks can reduce reliance on a single market. Emergency funds are vital for unexpected expenses, covering 3 to 6 months of living costs. This fund should be easily accessible and separate from investments. Investment accounts, such as brokerage accounts or robo-advisors, provide a platform for investing. Fees and commissions can impact returns, so it's essential to choose a low-cost option. Tax-advantaged accounts, like 401k or IRA, offer tax benefits for retirement savings. Contributions may be tax-deductible, and earnings grow tax-deferred. Lastly, regular monitoring and adjustments can help stay on track with investment goals. Investing for beginners can be intimidating, but understanding the basics is key to making informed decisions. One essential concept is diversification, which involves spreading investments across different asset classes to minimize risk. For example, consider a 25-year-old with a $5,000 emergency fund. They could allocate 40% to a low-cost index fund, 30% to a high-yield savings account, and 30% to a tax-efficient brokerage account. Another strategy is dollar-cost averaging, which involves investing a fixed amount of money at regular intervals regardless of market conditions. This helps reduce the impact of market volatility and timing risks. Imagine a 30-year-old who invests $500 every month in a diversified portfolio. They'll be buying more shares during downturns and fewer shares during upswings, reducing their average cost per share. Risk tolerance is also crucial when investing for beginners. Some may prefer conservative investments, such as bonds or money market funds, while others may be more aggressive and invest in stocks or real estate. A 35-year-old with a high-risk tolerance might invest 80% in stocks and 20% in bonds, while a 45-year-old with a lower risk tolerance might invest 50% in bonds and 50% in stocks. Tax efficiency is another important consideration. Beginners should aim to minimize taxes by investing in tax-efficient vehicles, such as 401k or IRA accounts. A 40-year-old might contribute to a tax-deferred 401k account and invest in a tax-efficient brokerage account for their after-tax dollars. Investing for beginners also requires patience and discipline. It's essential to set clear financial goals, and develop a long-term investment strategy. A 28-year-old might aim to save $10,000 for a down payment on a house and invest in a tax-efficient brokerage account to achieve this goal. Ultimately, investing for beginners requires education, patience, and discipline. By understanding the basics, diversifying investments, and considering risk tolerance and tax efficiency, beginners can make informed decisions and achieve their long-term financial goals. Investing for beginners in 2025 requires a strategic approach to achieving financial goals. According to a survey by the Securities and Exchange Commission (SEC), 71% of Americans are not financially prepared for retirement. This highlights the importance of investing wisely from an early age. To mitigate risk, beginners should consider diversifying their portfolios by investing in low-cost index funds or ETFs. This approach allows for broad market exposure while minimizing fees. As stated by John Bogle, founder of the Vanguard Group, the best way to guarantee low costs is to invest in a low-cost index fund. Another key strategy is dollar-cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of market conditions. This helps to reduce the impact of market volatility and timing risks. Tax-advantaged accounts, such as 401k or IRA, can also play a crucial role in investing for beginners. Contributions to these accounts are made before taxes, reducing taxable income and potentially lowering tax liabilities. Case studies have shown that investing consistently and patiently can lead to significant returns over the long term. For instance, a study by Fidelity Investments found that investors who started saving $500 per month at age 25 could accumulate over $1 million by age 65. Ultimately, investing for beginners in 2025 requires a disciplined approach, patience, and a willingness to learn and adapt. By following these strategies and staying informed, beginners can set themselves up for long-term financial success. According to a survey by Gallup, 52% of Americans do not have a clear understanding of investing, making it a daunting task for beginners. This lack of knowledge can lead to poor financial decisions and a lower quality of life. A study by the Securities and Exchange Commission (SEC) found that investors who educate themselves before investing tend to have better outcomes. This highlights the importance of investing knowledge for beginners. In 2024, the investment landscape is expected to shift, with a growing emphasis on sustainable and impact investing. A report by Morningstar found that 75% of millennials consider environmental, social, and governance (ESG) factors when making investment decisions. For beginners, it's essential to start with a solid understanding of personal finance and investing basics. A study by the National Endowment for Financial Education found that individuals who create a budget and track their expenses are more likely to achieve their financial goals. Investing in a diversified portfolio can help mitigate risk and increase potential returns. A report by Vanguard found that a diversified portfolio of low-cost index funds can outperform actively managed funds over the long term. By educating themselves and starting early, beginners can set themselves up for long-term financial success and achieve their goals. As we near the end of our journey to help beginners navigate the world of investing, it's essential to emphasize the importance of actionable insights. These are the takeaways that can actually help you make informed decisions about your money. According to a recent survey, 75% of investors say they're more likely to make a successful investment if they have a clear understanding of their goals and risk tolerance. That's why it's crucial to take the time to assess your financial situation and create a personalized investment plan. One expert recommends starting with a simple, low-cost index fund. These funds track a specific market index, like the S&P 500, and offer broad diversification with minimal fees. In fact, a study found that investors who held index funds for 10 years or more outperformed those who chose individual stocks by a significant margin. Another key consideration is tax efficiency. Did you know that taxes can eat into your investment returns by up to 40%? By choosing tax-efficient investments and strategies, you can minimize this impact and keep more of your hard-earned money. It's also essential to stay disciplined and avoid emotional decisions based on market fluctuations. Remember, investing is a long-term game, and it's essential to keep your eyes on the prize. Ultimately, the key to success lies in finding a balance between risk and reward. By taking a thoughtful and informed approach to investing, you can build a brighter financial future for yourself. Investing for beginners in 2025 requires a solid understanding of personal finance and investment strategies. Diversification is crucial to minimize risk and maximize returns. Allocate investments across various asset classes, such as stocks, bonds, and real estate. Regular savings and budgeting are essential for long-term financial stability. Create a budget that accounts for emergency funds, retirement savings, and debt repayment. Invest in yourself through education and skill building. Develop a financial literacy that will serve as a foundation for informed investment decisions. Consider low-cost index funds or ETFs for diversified exposure to the market. Automate investments through dollar-cost averaging to reduce emotional decision-making. To further your knowledge and start investing, explore online resources such as financial blogs, podcasts, and investment apps. Join online communities to connect with fellow beginners and learn from their experiences. Investing for beginners in 2025 requires a solid foundation in personal finance and investment strategies. One key takeaway is the importance of setting clear financial goals. What do you want to achieve through investing? Is it saving for a down payment on a house, retirement, or a specific financial milestone? Having a clear goal in mind will help guide your investment decisions. Another crucial aspect is understanding risk tolerance. Are you comfortable with the possibility of short-term market fluctuations, or do you prefer more stable investments? This will influence the types of investments you choose, such as stocks, bonds, or mutual funds. As you begin investing, it's essential to educate yourself on various investment options. Consider consulting with a financial advisor or conducting your own research to stay informed. Remember, investing is a long-term game, and patience is key. Don't be afraid to start small and gradually increase your investments as you become more comfortable. Every step counts, and the sooner you begin, the more time your money has to grow. Investing for beginners is a journey, not a destination. By taking the first step, you're already on the path to financial freedom. So, take control of your finances, stay informed, and keep moving forward. The future of your wealth is in your hands.